It looks like the stock market is pumping once again. The bulls have just been riding this wave of continuous grind to the upside, and the bears have been getting destroyed. So guys, in this video, I'm going to be going over why we are seeing this kind of a grind to the upside, and I'm going to give you guys the case for the bulls, the case for the bears, and kind of what is going on. So we had some key reports come out today, one of which was the retail numbers, and we also had unemployment numbers, and both those numbers showed that this overall economy is stronger than we expected. Unemployment is dropping, retail numbers are increasing, which tells us people are going out, they have jobs, they're not filing for unemployment, and that they're going out and they're buying retail items. So they must have money and the economy must be strong. So once that report came out, as you can see, the markets reacted very well and started pumping immediately. So I'm going to be going over the case for the bulls first. So we had this key level right here at 54.40. This is the zone that I've been talking about, where I said if we can break above this level, come back and retest it, we can start grinding higher, and that's exactly what we did at around this 54.40 level. This is what we did yesterday, and today the next level that we were watching was right here at 55.20. So that 55.20 level right there, and as you guys can see, that report came out and we broke above that level, and now we're coming back and we're at that retest level. And if this thing can hold this level, it's going to start grinding up to the next supply level, which would be this 55.80 zone. So this 55.80 zone is the next zone that the bulls want to see in the short term. Now I'm going to go to NQ and show you guys the charts for that. So if we go to NQ, which is obviously our tech heavy ETF, this is up 1.6% on the day, and there are a couple key levels for NQ as well. This 19,000 level, or 1910 level right here, this is the level I spoke about yesterday and said that the bulls need to hold this level for them to continue this uptrend. As you can see, we broke above this level, came back and retested, and that's exactly what they did. They were able to hold this level and test the next key zone, which was this $19,300 level. The reports came out this morning and this broke above this level, came back, retested it, and now it's grinding higher slowly, but it's grinding higher. The next strong level for NQ would be this $19,700 zone. So as you can see, this $19,700 zone, this is the level that we lost earlier in the past few weeks that caused this downtrend in the first place. So that's going to be a strong zone. If the bears want to continue this downtrend, the overall downtrend, they need to be able to hold this level. So guys, now I'm going to be giving you guys the case for the bears. So guys, those reports came out this morning, and obviously they showed our economy is stronger than expected. But this also means something else. It means that the feds may not raise interest, or they may not cut interest basis points as much as we thought. So the expected in the beginning was 0.5% back when the jobs reports were really bad. But now that the economy does look stronger, we have more reassuring reports. Well, now they might raise interest rates by only 0.25%. And that is something that the bears would see that could cause this downtrend. And we are looking at the same levels. So we look at the same levels, this 55.20 level. And if the bears can break below this level, retest it, then they can start grinding lower and test this 54.40 zone. So that's what the bears want to see. They want this uptrend to stop right here. Now if we go to NQ, so if we go to NQ, actually we're going to go to the Qs, because if we see the Qs have a strong resistance zone coming up right here. So what the bears want to see is for the Qs to come test this zone and start grinding higher, grinding lower, which would cause NQ to also start dropping. And if we continue higher, then they want this zone, this $19,700 zone that I just spoke about. They want this zone to break. So they want this zone to break and for us to start grinding lower from there. So when it comes to positions, whether you're a bull, you're a bear, whatever it is, just wait for a key zone to be tested, and then we have to see how price reacts at those levels. Now if we go to a couple individual names, I'm not going to go to a bunch of them, but there's a few that are doing really good. The first one is Tesla. So I spoke about Tesla this week as well. If we go to a lower time frame, I feel kind of FOMO because I've been speaking about Tesla and I said, you know, I think Tesla can start testing 220 in the near future. And the reason I was saying that is because these levels, so Tesla had these zones and it broke above this level. And yesterday I went and I grabbed a position long on Tesla right there, expecting this move. So I was expecting this move yesterday. Obviously that didn't happen. I was stopped out as Tesla started to move lower, but now you can see that move is starting to happen. Right now, I would say to avoid any type of FOMO, and maybe if Tesla can come back and test that 205 zone, then maybe I'll try again to see if we can see some upside. Until then, the next zone for Tesla would be around that 220 area. So until then, I don't want to be touching this thing. Another stock is Nvidia. So we can see Nvidia is kind of pumping today, and it looks like Nvidia has this key level up here. So this is the zone for Nvidia that I'm kind of keeping my eye on to see how we react at this level. This had a very strong reaction in the past where we dropped below 100. So is Nvidia going to struggle at this level, or is this going to be the area where it finally breaks above and starts to grind higher and has that kind of bull run once again to all-time high? So I guess we just have to wait and see. So guys, that's all for this video. Just make sure before you guys are taking any trades, you're grabbing any positions, to be checking your key levels and see where we are in the market. Don't be going against the trend. All right, guys, that's all for this video. Have a great day.